Good afternoon and welcome everyone. Thank you for joining us for today's webinar. My name is Eric and I'm the Accounting Manager at Premia TNC Singapore Limited. I'm so delightful to be here with you. Today, I would like to focus on some of the topics related to Singapore company management, introduction of Singapore taxation system, and Singapore Goods and Services Tax (GST). I truly believe that this information will be helpful and giving an idea for you on how our professional team can assist your company to ensure all the compliance requirements are in order. Just a little reminder before we get started. If you have any questions during the presentation, please type them into the question box on the right column. My assistant will collate and bring them to me. Submit your questions now, and I will answer them later during the Q&A section. If any chance we omit your question, we will reply you via email after the webinar. Now, without further delay, let's start our webinar. Singapore company management. Let's say, now you have incorporated a private limited company in Singapore. The next question you may ask, how do you stay in compliance with Singapore's business laws and regulations? There are annual statutory requirements that Singapore companies need to be followed, and let us go through them one by one. Firstly, annual general meeting and annual return filing. Annual general meeting (AGM) is a form of way for company to present its financial statements to shareholders. Shareholders can then ask questions about the health of your business during the meeting. AGM is therefore an important opportunity to address shareholders' concerns. Annual return (AR) filing is referring to an electronic form lodgement with Accounting and Corporate Regulatory Authority (ACRA) and contains important particulars of the company such as the name of directors, secretary, its shareholder, and the date to which the financial statements of the company are made up to. All companies in Singapore are required to hold AGMs as well as filing of AR. When to hold AGM and AR filing? If you are a listed company, you must hold an AGM within 4 months and file the annual return within 5 months after your company's financial year end, respectively. For a non-listed company, you must hold an AGM within 6 months and file the AR within 7 months after your company's financial year end, respectively. Required time frame will be approximately 1 to 2 business days are required for the preparation of AGM documents from the day financial statements received. Whereas for AR filing, generally it can be completed within the day. Required documents will be audit on unaudited financial statements, AGM documents. Non-compliance. For companies that fail to comply with the requirement of holding AGM and AR filing, the following actions will be taken by ACRA. Composition fines of $300 for each offence under Article 175, 201, and 197. Court prosecution. Disqualification of directors. False tracking of companies. Secondly, Goods and Services Tax (GST) relevant to those GST registered companies. Reporting period of GST can be on monthly, quarterly, semi-annually basis. Usually, most of the company will go for quarterly report basis. E-filing deadline is within 1 month from the end of the reporting period, and there is no paper filing. Required time frame will be approximately 5 to 10 business days are required for the preparation work from the day documents received till the completion of GST form. Required documents depends on nature of filing. It can be GST Form 5 for periodic filing, GST Form 7 for errors filing, GST Form 8 for final filing before deregistration. Non-compliance. From 1st April 2018, the late submission penalty of $200 is imposed immediately once the GST return is not filed before the due date. A further penalty of $200 will continue to be imposed for every completed month that the GST Form 5 or Form 8 return is outstanding, till the maximum of $10,000 for each outstanding Form 5 or Form 8 return. Apart from that, Inland Revenue Authority of Singapore, IRAS, may issue an estimated notice for assessment and impose 5% penalty on estimated tax and summon the business or person responsible to court. Thirdly, corporate income tax return. A company is taxed on income earned in the preceding financial year. This means that the income earned in the financial year 2022 will be taxed in 2023. All companies need to submit 2 corporate income tax returns to IRAS every year within the stipulated time. First returns refer to estimated chargeable income, ECI, which should e-file within 3 months from the end of financial year. It is an estimation of the company's taxable income after deducting tax allowance expenses. However, ECI filing is exempted for companies who qualify for the administrative concession whereby annual revenue less than $5 million and ECI is nil. The second return refers to corporate income tax return, which should e-file by 15 December every year. It is the declaration of company's actual income. Required time frame will be 2 weeks to 1 month are required for the preparation. It may vary depending on size of company, complexity of tax structure, and business activities. Required documents will be audit on unaudited financial statements, tax computation and relevant tax schedule, Form CS Lite or Form CS or Form C. Non-compliance. For company that fail to file its corporate tax return, the following actions will be taken by IRAS. Issue estimated notice for assessment, company required to pay within 1 month. Offer to compound the offence, not exceeding $1,000. Summon the company or person responsible to court. Last but not least, we are at employment income reporting. Employers are required by law, Section 68, Subsection 2 of the Income Tax Act to prepare annual report, that is, RAA including relevant appendix, for employees who are employed in Singapore by 1st March each year. Employer is required to distribute RAA to each employee by 1st March of the following year. Employee will then proceed with individual income tax submission by 15 April each calendar year for paper filing and 18 April each calendar year for e-filing. Required time frame will be depending on the number of employee and is scheduled according to case-by-case basis. Required documents are as follows: Form RAA, Appendix 8A, Appendix 8B, Form RAS, Excess CPF Contribution, Auto Inclusion Scheme, AIS. From year of assessment YA 2023, participation in AIS is compulsory for employers with 5 or more employees or who has received the notice to file employment income of employees electronically under the AIS. Non-compliance. For individuals that fail to file its personal income tax return, the following action will be taken by IRAS. Issue estimated notice for assessment, individual required to pay within 1 month. Offer to compound the offence, not exceeding $1,000. Summon to court. Well, let's proceed to our next topic. Introduction of Singapore taxation system. There are several reasons for investors turn to Singapore for establishing their operations, and one of the determinants is Singapore tax regime. Well known for its attractive corporate and personal tax rates, tax relief measures, non-taxable capital gains, one-tier tax system, and extensive double tax treaties. Persons, including corporations, partnerships, trustees, and bodies of persons carry on any trade, profession, or business in Singapore are chargeable to tax on all profits that accrue in or derived from Singapore, as well as income received from outside Singapore. There are different types of taxes in Singapore, as you can refer to our slide here. Let's move on to the definition of each type of taxes. Income tax is chargeable on income of individual at progressive tax rates, with current highest personal income tax rate at 22%, with effect from YA 2024 at 24%. And companies are taxed at a flat rate of 70% on its chargeable income, regardless of whether it is a local or foreign company. Property tax is imposed on owners of properties based on the expected rental values of the properties. Motor vehicle taxes are taxes other than import duties. They are imposed on motor vehicles. These taxes are imposed to curb car ownership and road congestions. For custom and excise duties, Singapore is a free port and has its relatively few excise and import duties. Excise duties are imposed principally on tobacco, petroleum products, and liquors. Also, very few products are subject to import duties. These duties are mainly on motor vehicles, tobacco, liquors, and petroleum products. Goods and Services Tax, GST, is a tax on consumption. The tax is paid when money is spent on goods or services, including imports. This kind of indirect tax is also known as value-added tax, VAT, in many other countries. Currently, the tax rate is at 7%, increased to 8% with effect from 1st January 2023. For payments of a specific nature, example, royalty, interest, technical service fee, etc., to a non-resident company or individual, it is required to withhold a percentage of that payment and pay the amount withheld to IRAS. This is called withholding tax. Betting taxes are duties on private loyalty, betting, and ship tax. Stamp duties is imposed on commercial and legal documents relating to stock and shares and immovable property. Other taxes are comprised of two main taxes. They are the Foreign Worker Levy and the Airport Passenger Service Charge. The Foreign Worker Levy imposed to regulate the employment of foreign workers in Singapore. Now, we are at the next topic of Introduction of Singapore Goods and Services Tax, GST. Goods and Services Tax, GST, was implemented on 1st April 1994 in Singapore. The Inland Revenue Authority of Singapore, IRAS, acts as the agent of the Singapore government and administers, assesses, collects, and enforces payment of GST. Introduction of GST is seen as a means to lower personal and corporate income tax rates while maintaining a steady revenue base for the government. GST is an indirect as its tax expenditure. GST is a broad-based consumption tax levied on the import of goods collected by Singapore Customs, as well as nearly all supplies of goods and services in Singapore. GST exemptions apply to the provision of most financial services, the supply of digital payment tokens, the sale and lease of residential properties, and the importation of and local supply of investment precious metals. Goods that are exported and international services are zero-rated. Are there any GST schemes to help businesses? The answer is yes. The Singapore government has introduced several assistance schemes relating to GST. These schemes generally help to ease the cash flow for businesses and help create a pro-business environment. Tourist Refund Scheme. This allows tourists who buy goods in Singapore from participating GST-registered retailers to claim a refund of the GST paid if the goods are brought out of Singapore. Cash accounting scheme is designed to alleviate the cash flow of small businesses. Under the scheme, businesses only have to account for output tax when payment received. Gross margin scheme. GST is chargeable only on the gross margin of your goods. Major Exporter Scheme (MES) is designed to help the cash flow of major exporters who have significant products. Under MES, GST on non-dutiable goods is suspended at the point of import and also when the goods are removed from the zero GST warehouses. Hand Carry Export Scheme is applicable if you wish to zero-rate your supplies to overseas customers for goods hand carried out of Singapore via Changi International Airport. Zero GST Warehouse Scheme is administered by Singapore Customs. Under this scheme, import GST on non-dutiable overseas goods are suspended when the goods are moved in to zero GST warehouse. GST is payable only when the imported goods leave the warehouse and enter into local market. Discounted Sales Price Scheme allows you to charge 50% GST on the second-hand or used vehicle. You do not need to seek prior approval from IRAS to use the scheme. Import GST Deferment Scheme (IGDS) allows approved GST registered businesses pay GST on import payments when their monthly GST returns are due instead of at the point of importation. Other industry-specific scheme. The government also has various GST schemes for different industries such as marine, logistics, etc. Now, I would like to go ahead and take some time for the questions. You can just type in your questions on the right column of your screen. Otherwise, please click on the live chat on the top column in red and have a meeting appointment with us. The first question: what is the compliance requirement after incorporated a company in Singapore? According to Singapore Companies Act, companies must comply with the annual filing requirements to ACRA and also need to file the annual tax return with IRAS. Please note that annual return filings are mandatory for both active and dormant Singapore companies. The next question: my company did not file the annual return for more than 1 financial year, and the current annual return is due for filing. What should I do? If your company has not filed its annual returns for more than 1 financial year, you have to file the overdue annual returns before you can proceed to file the annual return for the latest financial year. I have received a notification to request me to file for my personal income tax return. However, I did not work last year, and what should I do? Although you did not receive any income last year, you will still require to submit your income tax return. My employer has sent my employment income details to IRAS. Therefore, do I still need to file my personal income tax return? Although your employer has sent your employment income details to IRAS, you are still required to file your personal income tax return unless you have received no filing service (NFS) letter. What financial year end should I set for my new company? This is a business decision, and IRAS does not determine the financial year end for companies. If the company's financial year end is not 31st December, please notify IRAS by updating the company's financial year end via the corporate profile or contact details e-service. The company can decide on the financial year end that best suits its business operation. My company has filed the annual return with ACRA. That is still required to file the Form CS or Form C to IRAS? The answer is yes. The company is still required to submit the Form CS or Form C to IRAS by the filing due date, unless the company has been granted waiver to submit the corporate income tax return. If the company has filed a full set of financial statements with Enquiry in SPRM format, it does not need to submit again when filing the Form C with IRAS. My company is not GST registered. Can I claim GST incurred on my business purchases? My answer is no. If you are a not GST registered company, you cannot claim the GST incurred on your purchases. I have just submitted my application form for GST registration. Can I start charging GST? You should only start charging GST from your effective date of GST registration. Upon approval of your GST application, you will receive an approval letter stating your GST registration number and the effective date of GST registration. Alright, we also have some questions received from the live question platform, and I'm going to answer them. Let's see the questions. Do I need to file the ECI for my company if it is new? You do not need to file the ECI for your company if it is new and your company's annual revenue is not more than $5 million. If your company's ECI is new and its annual revenue is more than $5 million, you are still required to file the ECI. You can fill in the ECI to be taxed at 70% as zero in the e-service. What is meant by revenue? Revenue refers to a company's main source of income and excludes separate source income such as interest, dividend, and rental, which do not arise from its principal activity. In the case of an investment holding company, the revenue will be its investment income. Example, dividend and interest income. Well, I think we are heading to the end of today's webinar. I hope this webinar will benefit you. If you would like to find out more or looking to begin your business expansion and investment journey, please feel free to contact us for further discussion. Thanks again for joining us today, and we will see you next time. Goodbye.